We're also seeing some more headlines that Bannon is predicting that Donald Trump will win in 2020. Let's trade all of this. Start off with what was probably the most surprising comments, and that was the hawkish tone, hawkish in terms of China, from Larry Kudlow. Didn't hurt stocks today, Guy.
Didn't hurt stocks. It didn't hurt stocks at all. I thought first of all, I thought Larry looked great, and he sounded fantastic. He made some really salient points. You thought his comments would hurt the market. Clearly, it doesn't. I tell you what, sort of the most interesting thing to me at a very interesting day were the comments out of Mary Erdos from J.P. Morgan. She mentioned what concerns her, what gives her, weighs on her, are the violent moves they're seeing in currencies, not least of which is the U.S. dollar, something that Dan and Tim have talked about. And the other thing, something they spend an inordinate amount of time and money on, cybersecurity, which really justifies the move you've seen in Palo Alto Networks. So Larry did his thing. It didn't have any effect on the market. But what I take away with those two comments, the fact that the currency moves concern her and the amount of money being spent on cybersecurity.
The Dixie is almost at a one-year high here, Tim.
Yeah, I have to tell you, for a guy that thinks and has thought that the dollar was going to run out of gas at 95 in the Dixie, there's some things that I heard today and that I've heard over the last couple of weeks that at least here's what you want to think about. This is an administration, and this is consistent with what Guy's talking about with Larry. This administration is going to go for it with China. And you don't want to hear me talk politics. This is not politics. What I'm saying is they've got momentum here to dig in. And if they've got a 4% economy as they think, they're not necessarily worried about some of this short-term stuff. That, to me, says this drags on. A stronger dollar, by the way, offsets tariff pressures. It's certainly a deflationary force for the economy if they're worried about that. So I think the dollar may be somewhat in play here. I think at a minimum, I think the domestic stories, the industrial stories got a bigger bid today. I think the bottom line here is trade is going to be with us for a long time. I'm an EM guy. China's 40% of the EM index. This does not feel good for emerging market investors.
It felt like there was a ceiling that emerged from that discussion with Kudlow in terms of the amount of goods, the dollar amount of goods that could face tariffs. Jim tried to push Larry and say, should we go $500 billion? Should we go the full amount that we take in from China on a yearly basis? And Larry didn't want to go there.
Yeah, that part was interesting. I think the other interesting part is what Larry said and the reaction and how resilient the market has been. I mean, time and time again, and this has been what the Trump presidency has been about. A lot of flash, a lot of, people are looking around and trying to decide this is going to be something awful. And the duration of these moves has been very, very limited. And including today, you would have thought the market might start to tip over a little bit just because, we've gotten through the financial earnings. We're looking ahead a little bit, and people are now focusing on exactly that. And it didn't happen. And meanwhile, you look at the industrials, you look at healthcare, you look at technology. There are parts of the market that still, in my opinion, actually look cheap. And the VIX is certainly cheap.
Well, last week, we played this game where we're going to break out at 2,800 in the S&P 500. And I think all of us, the answer was, well, it's probably more like 2,900 is the level, or 2,950, which was the prior high on January 26. And it seems like that's a foregone conclusion at this point that the S&P is going to test that. We know the NASDAQ and the Russell 2000 have already made new highs. I'll just mention this. When you think about, your commentary about trade, I mean, when you think about what drove that last leg of the market in 2017, I think it's really important to remember that the S&P 500 at one point in early January is up 30% from the late 2016 highs. 30%. So there was a lot of the deregulation, a lot of the optimism about tax cuts, that sort of thing. So we kind of overshot. That looked a little bit like a runaway breakout, right? Like with no fear in sight. I think the biggest drawdown, peak to trough, was 3%. We know where vol was all last year.
Well, I'm confused.
So what I'm saying is this year we've had this thing. The breakout, we're talking about it a little bit higher. We got to talk about getting through the January highs, and then we kind of see what happens as far as the market's concerned. Because my point is that we have this trade thing is going to go to the midterm.
Okay, but
the Chinese are not going to settle this before then. So you're talking about all these threats. We are going to get ratcheting it up to hundreds of billions of dollars.
Okay, I'm not sure what you're saying. What I heard you say that I think is very important.
Funny, I wasn't even talking to you, actually, so that's okay.
Let's keep going.
Anyway, come on. Go ahead.
What I heard you say that I thought was interesting was that back in January there was no fear. I actually think there's a lot of fear in the markets right now, and I think that's good for the stock market. I think actually we've repositioned substantially. I think because we're at a place whether it's the City Surprise Index, where there's people harping on the yield curve, where there's people worried about the banks, I think people are very worried about trade. I think that's good for the market going higher, and I actually think that's part of the dynamic at work.
I would say trade is the only worry. I mean, really, honestly, it seems to me that everybody's focused on, trade is obviously front and center every single day, ever since Trump really started to ratchet this up, not just with China, but everywhere else around the world that we've ratcheted. So, I mean, that has been an issue. But other than that, I see people looking at it, and we see these earnings. I mean, this is very early. We're only 10% of the S&P so far. these earnings have
You
been
think
crushing.
you think trade is the only worry out there?
I think it's the biggest
After
of,
Monday,
of the
don't you
worries.
think there's a huge worry that we have an increasingly illegitimate president in the White House who does not have our country?
I don't.
The market.
Is that really a worry right now? No, honestly, Dan, is that really? I'm not talking from a political side here. Is that?
I think a lot of our viewers are not focused on it. I think they should
In all honesty, Dan,
the market hasn't flinched on that.
I've heard this kind of stuff on the rhetoric on the network since Trump got in, and all I can say is you have to keep your head up and look at what the markets are doing. And I don't feel like people right now have if they had the concerns that you're talking about, there would certainly be much more volatility and some sellers in the market, in my opinion.
I got to tell you, I also think that the market, if anything, what you've seen in the last 48 hours is the market doesn't care at all. And I don't think the market, at various times in the last 3 months, ultimately, yes, trade matters, and we've tried to quantify it. The other thing is, this week, we had Fed Powell, Humphrey Hawkins' testimony. If anything, as much as he tried to tight walk this, the Fed basically gave you more room to say they're going to be less hawkish, and that's bullish from.
I want to go no spin zone now. Let's talk about some of the names that were actually mentioned at this conference. Long Huntsman, long Take-Two Interactive, long Biogen, short EVHC, short MD.
Yeah. I mean, I'm sure the guys have views on these. Biogen for me is sort of there's huge optionality. If they get Alzheimer's right, that stock is could be a double from here. I'm not trying to be hyperbolic. That is actually fact. They rely on their MS business right now. They get Alzheimer's right, it doubles. But the most interesting one, and we've had the CEO on, Take-Two Interactive. People will knock this on valuation, justifiably so with their earnings growth, but this is a hot space, as Tim has pointed out a number of times. Samantha Greenberg, I think, pitched it, thinks it's going to 170. I think your downside is 100. So in risk reward, I think Take-Two is the best one out there.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.